So this is Data Trader Pro doing our nightly wrap for Friday, January 8th in the market. Very interesting session today. We've been going down. We're definitely in a down trend. There have been a lot of signs about potential bottoms, local bottoms, maybe not lasting bottoms, but local bottoms around. But they've all failed, one after the other. So we'll go through the site page by page, and we'll look at yet another potential bottom formation. But again, we're not suggesting that you knife catch the market here. We've had a long run, and this could be we've had a potential double top on the market. Double or triple top on the market, a large rounding top, and we could be rolling over, and this could last for some time. So we're not suggesting a long-term knife catch, but as with any type of market, it goes both directions. So let's have a look at the internals first. Market sectors, almost everything was red. Oddly, you'll see things like natural gas, which pays virtually no attention to the US dollar or to the regular market. It trades on its own. Continuing rally, so if you're in it, great. Just about every other sector was pummeled today. So move on directly to the indexes. And here we see something that we see the beginning. Our intra-index divergence gauge is very handy for spotting divergences between the major indexes. And when it gets to 1% or more, we tend to find that we're close to some kind of a market turn. We've got the NASDAQ 100. These are the ETFs. So this is QQQ, and the Russell. There's a 1% divergence here, roughly. So so that's not that healthy. If these were all down close to 2% like they were yesterday, then then it's another story. But we're starting to see NASDAQ some buying piling in. We'll show you that later in the block trade space. Market map, again, divergences. So we've got the differences between, say, the NYSE advanced decline and the S&P advanced decline, and interestingly, these were all quite neutral for almost the entire day. They really only got bearish on the indexes close to 3:30 in the afternoon, certainly after 3 o'clock. So it was a late day sell-off. Whether that lasts or whether we're finding a bottom around this support level, we'll see. So advanced declines on the major exchanges, NYSE, NASDAQ, bearish but not very bearish, really. Extreme readings on 52-week lows versus 52-week highs on NYSE and NASDAQ. We tend to find that those happen at turning points too. So it's just, there's a little bit of a theme here in today's wrap, which is there are some things that we tend to see around bottoming areas, but obviously don't put your life savings into a long position right here. So the Dow is very bearish. Russell became fairly bearish. It was quite neutral for much of the day. So let's move on to the trend page. The dollar-weighted buying pressure and the day type showed very much for almost the entire day up until the late afternoon of the session that up, down, up, down. This is what you get on a neutral range day, is that some buying, some selling, some buying, and we don't really go anywhere. So we had an up move in the morning, and then we sold off, and we held the lows for most of the day, and then finally, right near the end of the day, we broke, and price broke down to a new low on all the indexes, and the dollar weighted showed a lot of selling in the key market moving stocks. So so again, we're going to have to see if that's a lasting thing. The intraday McClellan, our version of the intraday McClellan oscillator, the DTP MCC, is was bearish, but it was actually a big improvement from yesterday, and actually again spent a lot of the day in sort of what we would call neutral or range day kind of. It was bearish more than it was bullish, certainly, but it was anything sort of above minus 80 or something it isn't really a heavily bearish position in this. Net issues again spent part of the session positive, and then dropped near the end of the day below zero, right? So in the afternoon, certainly. And net volume grew more bearish throughout the day. So again, we'll have to see how that plays out. Block trades, more interesting stuff here. We had a really big buy. The first big block trade that came in at really a support level this afternoon was on QQQ, and it was two large identical size transactions of almost 2.9 million shares. Price rallied from there and seemed to be finding support up until really late in the day, 20 minutes till close or something, and then we had another sell-off. But we've had another 3 million block trade volume right after close. So, are we finding support? It's a Friday, Friday action. A lot of Friday action has to do with options expiry. Now that weekly options are very highly traded, huge volumes in weekly options, especially on the index ETFs. There's a lot of, I won't say manipulation, there's a lot of games going on that have to do with price and pinning options at or below or above, depending on the option seller's positioning. So when you see these huge prints at lows, you tend to think that they're probably buys. Now, we don't want to bias our trading, certainly below this print. Things get a lot more bearish. So, just use them as a line of demarcation. Again, we've said that in our updates before, that if we use them as a line of demarcation, let's see if we can do that. Yeah, so roughly 104. We would want to trade back up to, this almost this is, I think, 104. These are the upper levels, about 104.60, something like that on the Qs. Above that, things get a lot more bullish. So, but certainly below, we don't want to fight this. Below these huge block prints, they were most definitely sells, and follow the smart money down. Anyway, let's see if I can figure out how to erase this now. Yeah, I'm going back. Okay. Also in the block trade space, we had SPY coming in with some prints at the end of the day, again on large volume. 3 million here. Also on IWM, although these were smaller, there was a large print here, 1.5 million shares. So you're getting some large institutional activity at these levels, so something to watch for. Volatility space is looking like some potentially distribution here, but although we don't know yet, right? So we're going to use this level, this on the VXX of about 25, 26 level, and below that is would be bullish for SPY and bearish for VXX, right? So you can see that you had a large series of buys here, and then this may be distribution from that move. A few corresponding, XIV is the inverse of VXX, so we would expect to see the opposite happening, and it kind of is, although we didn't see the huge sells that we saw corresponding to these buys. So we'll just keep track of it, and use these levels as lines of demarcation. They're bullish above the large prints and bearish below. The energy space, UNG is natural gas ETF has really rallied a lot over the last 2 weeks, but week in particular. It had a pullback and then it rocketed off. We're not really seeing what might look like big sells yet. So we saw more buys here, some more buys to continue it along. So, you know, although it's getting quite overbought on the daily technicals, it could continue. USO's been hard to read. It's up and down and up and down, but we're, again, every low we're seeing more block activity. More block activity, it pops and it sells off and it comes down, more block trades. You kind of get the feeling that a move is brewing, but you know, we'll just have to see. This 980 level on USO is going to be kind of a critical, because you see all these block trades bunched up here. Again, bullish above that and bearish below those prints line of demarcation. Metals. Yeah, so metals have been a difficult trade for a while. That's, I think, stating the obvious. But you know, we get pops, we get the beginnings of what looks like an up move going, and then we see a lot of sells and price drops by. So the same kind of pattern. Silver and gold are diverging again. Silver, there seem to be some buys at the low, and gold, there seems to be some sells at the top. So I wouldn't say that this is a very clear picture. GDX, again, another big print, huge prints at close. This part of that may be the GDX related triple leverage ETFs like NUGT and DUST rebalancing their portfolios. So they're, you know, if you see these huge prints exactly on the close, four on the dot, then some of that volume may have to do with that. So it may not be as clear as we think. So anyway, summary page can always be used as a time in sales, really, a virtual time in sales. You can watch these. You can minimize the screen if you want. You know, control minus sign in Windows will do that. You can watch 3 or 4 tickers and the trades coming in quite easily. Yeah, so we'll watch for large prints here and then the reaction off of them, and often you can stay out of trouble that way. All right, so one of the things I mentioned was, I'm not sure if this is updated for close yet, because we're doing this right after close. Yeah, so basically the NYSE advances minus declines were very bearish. They closed down here yesterday on Thursday. I think it's Thursday, yeah, and today, yeah, so we're updated for today. And yeah, so like we saw earlier, the advanced declines actually started out quite bullish first thing in the morning and then bled off through the day. So, but they're making a higher low than the last, well, certainly not this, but the last few days. So they're closing at a higher low. Again, maybe a little bit of ammunition in our potential bullish setup. Exact same pattern on the NASDAQ advances minus declines, higher low into close. Yeah, I think we should probably go to the breadth page and have a look at where we finished up. Now, all right. So, you know, NASDAQ trend getting into bullish territory, Russell trend getting into bullish territory adds a little more ammunition into our thesis that maybe, you know, a solid bounce is going to come out of this down move. Although, you know, if you look at the internals by themselves, they're fairly bullish. I mean, certainly on volume. When you have volume outperforming, you know, to the downside, especially the advanced declines on every index, that's a little bit of panic, right? So it's like the advanced declines are telling you how many stocks are being sold versus how many stocks are being bought, or vice versa, and in this case, it's only a little over 2 to 1. You know, so it's not like a massive crushing sell-off. But when the volume starts to accelerate, there's a little bit of fear, a little bit of panic. But still, the advanced declines are not showing a massive sell-off here. So, take that for what you will. But, again, I think there's, 4 or 5 or 6 different things pointing to the fact that, a bounce is fairly likely to come soon, early next week, Monday, Tuesday, Wednesday at the latest, something like that. But I think if this pattern continues, we will get a bounce. The volatility space, I don't know why that's taking a while. Okay. Hello. Coming. I think the end of day, there's been a lot of activity going on here. Hello. Let's try again. Oh, I think we're having a lag out, so not sure. Let's reload the page. Yeah, okay. I don't know what happened there. We had something with the browser hung. Anyway, yeah, so most of the day we were negative on every volatility index. The short term, the VIX, which is the 30-day, and the 3-month version of the VIX, which is VXV. Although the futures curve in particular has been very front loaded. We've had high backwardation between this expiry, January, and next month, which is February. So the January has been far higher today, almost 9% higher than February. So whatever volatility move we have underway, the next month, February, is not priced nearly as high. It's 9% lower in price than January futures. So even though they're elevated, this move may not be pricing in something to last. Although I'm not sure. We've had VXV priced fairly high for like a good month and a half. So finally we seem to be getting a bit of follow through. So I don't want to call this volatility move over yet, but it's something to certainly what we'll be watching for is when VVIX, which is the volatility of volatility, drops into the red, and the backwardation starts crawling down. And as soon as we have that, we think that we're going to get a rally. But just pay attention to these. Pay attention to these. If all 3 of these percent gauges are red, and volatility of volatility goes red, and the backwardation starts sliding into 0 or even into the red, we're going to have a good rally. But wait for it. I would wait for it rather than try to front run it. Daily volatility, I think probably we might be able to glean something from the positioning of, so is that, that's not updated for today. I have seen, let's go to here. Okay, this should be today's, right? Yes, that's the 8th. Okay, so these are the Bollinger Bands. We've had 2 piercings of the Bollinger Bands on VIX daily. So we're getting into overbought for VIX. We're certainly nowhere near the levels we had this summer. So we've got a volatility move. The technicals like MACD, stochastics is getting fairly high, mostly as high as it gets, and with the piercing of the upper Bollinger Band on the daily, we think that maybe this room's going to run out of room. This run is going to run out of room soon. There's a tongue twister. MACD has room to go, so we'll have to see. Again, don't front run this reversal or this potential reversal. Just watch the indicators for it. I think the most telling indicators for that, because the breadth isn't really that terrible, is going to be volatility. I would watch the volatility page and gauges very closely in the next day or two for a sign of turning. And when they turn, volatility will generally turn hard. It will slam down. So don't get into heavy longs on index products. equity index products until you see signs of that. Okay, I think that should do. We've covered a lot of ground today. Have a great weekend, everybody. That's our daily, nightly wrap for Data Trader Pro, and stay tuned for more. Thanks so much. Bye-bye.